Okay, we are live. How's it going?
Good, you?
Yeah, good.
Let me shout out this stream just so I make sure. It's been a little bit.
Just
There
give me a
he
sec.
is. That's SoFi Weekly. You didn't even tweet out the link for this.
No, I didn't.
All right.
I can do that now, though.
Let me grab this here. Hold on one second, guys. And tonight we're going to be talking a lot about autos. Maybe a little Amazon too, but lots of Rivian stuff that relates surprisingly to SoFi, but also relates to Tesla and Amazon a bit. So it's fun to see the links and how everything matches up. Let's see.
Faraday Future. You remember Faraday Future? That was a thing.
Yes.
There was a chart. Maybe it's in my liked posts. I like this chart around like all the EV companies that had gone bankrupt. Here, I have it right here. I found that to be pretty interesting. Hold on, let me throw it up. Have you seen this before, Roy?
That's pretty cool.
This is if you had invested $1,000, what would you have left? Tesla's your best bet with like $450.
Yeah.
Everything else looks like my gambling streak, basically.
It's rough. It was crazy because I began. Most of the time I just did index funds, nothing special or fancy, and then I suddenly had time during COVID, and so that's when I, outside of a little dabble in 2008 and a little dabble in 2002, actually, that's all I've done. That's when I really started going into individual investing and focusing on that. EVs were all the rage. Like everything was up so much with everything, but especially the EVs. And man, with cars, with vehicles, and I know Tesla is more than just a car company, or no disagreement there. They're very, very cyclical. And some of these things, a lot of industries have cycles anyway, but man, this is just, I didn't see this happening to this extent. I knew that some of these companies like the Canoe, the Workhorses, the Faraday Futures, and Fisker, I was like, yeah, those are not going to make it, but it's crazy. Small Wallet asked, by the way, if I'm picking up PayPal at these prices. Yes. Yeah. Hand over fist.
Maybe we can talk about that at some point tonight. Touch on PayPal as well. So, okay, I have zero context on this Rivian news other than the headlines. Maybe you would love to fill me in, and then we can chat about that first.
Yeah. So Rivian, just to back things up, I think the product is very well loved as far as a company, but it's really hard to scale. Tesla, of course, had that time where they were ridiculously close to bankruptcy. They had tried to raise capital, more capital, a number of ways, and they got to the point where they could have very easily. It was almost like a coin flip. They could have come up with Tells, and there'd be no Tesla, or at least nothing like we know of it right now. Most startup car companies don't make it. Like if you look at going back to the 1930s, 1940s, when there's all these different vehicles starting up, a whole bunch of them didn't make it. It's a very difficult business to scale. Rivian has a great product, but they've been having problems scaling. And even as they have increased sales some, although that's slowed down just because nobody wants an EV right now for whatever reason. Part of that's interest rates, but that's not the whole story. They still have not been able to drop their costs. So with vehicles, and actually most manufactured things, there's something called Wright's Law. Are you familiar with Wright's Law? So Wright's Law is that every doubling of production of something, that you have about a 20%, and it depends on the product, but a 20% or so cost savings, because you're buying things more at scale, you're getting more efficient at what you're doing, you're learning to and it works that way across most things. But that 20% can vary. So Rivian hasn't experienced that. I think there's some inefficiencies there. There's some supply chain stuff that Volkswagen seems like that it can help with. I think that they were looking at from Ford, and Ford was an initial investor, just like Amazon. It hadn't happened yet for Rivian. So they've been They raise a ton of actually, pull up the while I'm talking, pull up the chart of Rivian just so people can see where they were before. They raised during their IPO phase, and they did, I believe, sell shares and dilute, which was smart of them at this price. A long time ago, a lot of cash. But the problem with Rivian is you look at book value, you're like, hey, it's a great deal. But I mean, they burn cash. They burn cash so badly. This deal is not going to change things. What it does is it gives them more time, a longer runway. So yeah, you can see, like, actually, my middle son invested in Rivian very briefly, not very much money, and I think he made like a couple of bucks on it. But it's been tough. So the biggest question mark with Rivian is Tevis showed all these charts of different EV manufacturers that are basically gone or to the point of being gone. Rivian is one of those that I think will make it. I've thought that for a while, but it's not guaranteed. What the Volkswagen deal was is this, that they came in and they said, okay, you need an investor. We can invest. We will give you $1 billion. And they're doing that partly for a 5% stake in Rivian. And so they're doing the convertible note thing, and it's something like 1078. So right now Rivian price is 14 something. I know it went up a bunch and it came back a little bit. Futbucker, I see you. Yes, you called it, man. You nailed it with Rivian. Congratulations on those gains. Anybody else that's holding it, well done. Anyway, $1 billion. They are diluting. It's convertible note situation. And then they pledge up to $5 billion more, again, for more dilution. And that dilution, half of the dilution is fixed at that 10 whatever amount. And the other half, it depends on the aggregate share price over, I believe, 45 days. So yeah, Futbucker, weeklies, those are printing. So love to see it, man. And you always call your shots too. You don't hide when when you make a loss. But you tend to get a lot of them right. So definitely follow Futbucker, by the way, on X. His name, like, you'd be like, this guy's an idiot. He's not an idiot. So he doesn't even do this for a living, but he's good. So yeah, the biggest takeaway is this gives Rivian a lot more time to figure things out. They are, as part of this deal, giving some of their software infrastructure to Volkswagen. Volkswagen is helping them with some supply chain logistics. And so it makes them a little bit stronger, but at the cost of dilution. Now, what's interesting to me is it's always about dilution. It's convertible notes. This hit Rivian, and Rivian spiked massively. And of course, it came down from the after-hour spike. Always an overreaction initially. But SoFi did something that was similar, not out of desperation, but they did senior convertible notes a couple of months ago. And Tevis, remind me, how did the stock react?
It went down.
Yeah, just a little bit, right? A couple of cents.
Yeah, a couple dollars.
Couple dollars is right. And people were livid. But it's the same thing, except for Rivian. For SoFi, like, they're making money. They're fine. They're not at the point of bankruptcy. They're not burning cash or anything like that. They're profitable. And but for Rivian, it came out of point of weakness. I don't know all the terms. I've not read all of that, but I've read a summary. Dilution is painful. It's a normal thing for vehicles. I think they had to do it. I think that the bump in price being raised for Rivian is mostly because, hey, Rivian has a lot more time to figure things out, and the product is very much loved. I don't know that they will exist as an independent entity forever. I think that they still might get bought out, but this gives them some time to figure it out. So kudos to Rivian. Yes.
Yeah, some questions. So Volkswagen, they took a stake in Rivian, essentially, right?
Yes. Yeah, 5%. They own 5% of Rivian.
5% for $5 billion?
Through the for the $1 billion, they own a 5% stake through the convertible notes.
And they have an option to go as much as $5 billion extra.
I believe $5 billion more, but I might have misread that.
So is that what? Yeah, like, what is that, like 20% then of the company, something like that?
It depends on the share price and when that's done. But yeah, basically, yes, they own. I looked at it; it's close to what Amazon would own in that scenario. And Amazon, actually, it'd be a little bit more. Amazon still owns a big stake, by the way.
Ford completely sold out of their stake.
Yeah.
Amazon is the other big player that has a stake, and Amazon has about what 20%, 25%, something like that.
Let me pull that up.
Because I mean, I think the interesting conversation here is the potential for Volkswagen to completely buy out Rivian. We know that they're really the only legacy player that can pose a competition to Tesla long term. Like, probably not significant competition, but I see them being one of the only players in the market over the next 5 years. I can't say the same for the other legacy automotive companies. I'm like shocked that a lot of them are still in business. I mean, Ford is trying their best. GM, I don't know how they're still in business. There's a lot of other ones where I'm just like, they're going to be evaporated by the time that the world transitions over to EVs. And if I think about who the players are, and I mean, Elon has validated this to a large extent on the market research side, it's going to be the Chinese auto manufacturers. So the Neos, the Xpengs, the whatever. And then it's going to be probably Volkswagen and maybe Ford as like the legacy players. And then like Rivian is one of those pure EV plays, and Lucid is one of those pure EV plays that I could see Lucid going private completely. I could see Rivian being bought out completely.
Yeah, it definitely could. And by the way, I did look it up. The Amazon stake is, according to Fortune.com yesterday, 16% stake valued at nearly $2 billion as of Tuesday's close. And the Volkswagen Pact calls for Volkswagen to invest an additional $2 billion via two equal tranches in 25 and 26. So Volkswagen might actually own more than Amazon. And Amazon, by the way, as a reminder, the initial buy-in for Amazon, part of the reason for that was that they have a lot of Amazon vehicles out there that are Rivian. So I don't know if you've seen any in Canada that are the new.
I don't think so.
Yeah, they're all over the place here in Houston. And I had a very, well, about as long a conversation as you can with the delivery guy, a couple of minutes conversation. And he was raving on how good the Rivian is for the delivery vehicle. So people love them, even if they're just driving them for work. Hopefully they make it. So let me ask you this. We're not Rivian shareholders. We're Tesla shareholders. Does something like Rivian making it, is that good for Tesla or bad for Tesla?
I think it's good for Tesla. I mean, okay, people in the comments will be like, yeah, obviously he's going to say any alternative is good for Tesla because of the buy. But look, I wouldn't want Tesla to be the absolute only EV player in the market. If you want that market to be truly validated, you need some type of competition. It helps with regulation. It helps with, like the choice essentially that people have in the market. It helps with competition. Like they'll be more incentivized to be competitive if they have other players that are on their heels. So, I want more companies to succeed at making EVs because it brings that EV revolution all the faster.
Absolutely, yeah. Barking Shrimp said it. Rivian surviving solidifies the industry, and it does. If Tesla's the only one, I mean, you can think about they're already selling the rights to be able to charge, getting a little bit of premium from their charging stations, so they benefit from that already. They can sell different parts of their technology, their patents, or give rights to that to certain companies if they want to. They also can benefit from full self-driving software, which, I mean, you can do that with ICE vehicles too. But the other factor as well is we're EV owners now. And my wife, I thought, she was okay with Tesla. She's like, yeah, it's your car. You can, get whatever, and I'll figure out how to drive it. And in the process of her learning how to drive it, because there is a little bit of difference, she's like, this is really good. And now she's at the point where our gas vehicle was hit. Somebody ran a red light. Damage wasn't too bad. It looked like it would be totaled. They told us a couple times it would be. They're backing off from that, whatever. But my wife's like, hey, if this is totaled, we're going to get a second EV. I don't want to drive gas anymore. I'm like, seriously? And she was very serious. And of course, she was wanting Tesla. The thing is, like Rivian's a very good vehicle. I've not driven, I've not been in one, but I know people that have and love them. Like
Yeah.
they seem very high quality. Some EVs are not, by the way. Fisker, I wouldn't want to own. But if somebody owns an EV, they're used to an EV. They get used to those little quirks of needing to charge and have a charger at home or going to charging stations and the range and everything. There's not many people, after you get used to it for a month or two, that want to go back into the Stone Age and drive a gas vehicle. Like there's nice gas vehicles, but we've converted, we've switched over. I don't know that we'll ever buy a ICE vehicle again.
It's not only that. I mean, in copying Tesla's approach, they're also copying a lot of Tesla's form factor in terms of, one of the reasons why I really like Teslas in general is that not only are they an EV maker, but they also have a complete software layer in their offering. And it seems like it was so needed. It was actually a long time coming, because just having this giant iPad as your control center, I think, is definitely better than having this entire what was there before, right? And most of the new cars sold, they haven't fully adopted that form factor. It's a cost thing, whatever, convenience. But all the new companies, like the pure EV companies, like the Lucids, the Rivians, the whatnot, they are also in copying Tesla as a pure EV play, but they're also copying the experience from a user perspective in that software layer. And I think that that's really the next evolution from the user experience, to say, okay, well, I want that software layer. I want to be able to integrate everything. I want all the way down to something as silly as connecting a console and playing a video game in my car. I can't do that on, a Honda Civic or a Toyota Corolla, but I can do that in a Tesla. And the future versions of these modern companies, you will be able to do that. It'll become a table stakes thing. And so that, I think, is really interesting, because that also opens up this entire new space of what is possible, right? You're going from flip phones to touchscreen phones, essentially. And, for Tesla, I think the car business, like the hardware sale business, that's just the first layer. And the extrapolation to that is them selling FSD, them selling, that software, like Tesla having their own app store. You can imagine all these different use cases after you get them into that ecosystem. And there's a lot of B2B applications with regards to the supercharger network and FSD alone, that Tesla themselves are incentivized to have more competition in the space, because they can essentially be the core supplier to that competition.
Yeah. I saw Fut's comment as well. He said, I think this earnings Rivian will surprise. One interesting thing with this. So when you're getting a big investor like this with Volkswagen, you open up the books. Like they get to see everything. They know what this next quarter will print. I mean, other than the next few days or whatever. If they were looking at Rivian, they're like, hey, Barking Shrimp was right. Like they continue to have, worse and worse revenue. Basically, they're selling fewer and fewer vehicles. They're having issues. They're facing the same headwinds as Tesla is, but it's even more severe because they're not as good at Tesla. They're not as efficient. There's a lot of competition in this space, and fewer people are wanting that. So, but with Volkswagen taking a look at the books, if I were Volkswagen and I was looking at this and I'm like, hey, their sales have gone down every single quarter and they've gone down again, and we're not seeing something internally that indicates that they're going to be able to turn this around, I don't think they would have made this play, because this is not a small commitment. Even for a company like Volkswagen, you can't just casually throw away, $5, $6, $7 billion. You can't. Maybe Apple could. Apple, they I don't know how much they spent on that EV car dream. So I would guess, if I had to guess, and I don't bet on earnings. Probably the earnings will be a surprise as well for Rivian this coming quarter. Not great earnings, but that's not what's expected at all. So, and that's part of the pump is, it's all about expectations. A lot of people were thinking Rivian is just on borrowed time. It's going to die. Well, no, it's not. It's going to be around for a while and maybe for a very long while. We'll see.
Yeah, I think this news to me says just as much about Volkswagen's commitment to that EV plan as it does, for Rivian's candidacy, as a viable, buyout target. I really think that, I mean, when Herbert Diess was there, and I still think the vision is for Volkswagen to be a real player in that EV.
Yes, this helps them.
Yeah, absolutely. And it shows the market that they're serious about it, that they're investing in it, and that they want to be a contender. And I think it's good news for the entire industry as a whole.
And there's also just a natural buyer there too. Like if things don't work out and Rivian just can't stand by itself, I mean, Volkswagen will already own a massive stake. So it's pretty easy if they're like, hey, we still like the technology, we'll just put a Volkswagen name on it. I mean, even look at the vehicles; they look very similar in many respects. But yeah, I think that Rivian, this actually pretty much guarantees Rivian's survival. Standalone entity, not 100% sure or not, but they'll be around. So very good news for them. Congratulations, shareholders. Now, Rivian, like Tesla, primarily operates through not having dealerships. Like you buy the vehicle directly. You don't have to go into like a Rivian place to do that. What news that I found very interesting last week? Did you follow the CDK dealership hacking news at all?
No, dude, I've been under a rock this entire
Yeah.
week.
So CDK software is used by half of dealerships in the United States. And so Stellantis, I know dealerships do quite a bit of these as well. And they were hacked. Their software was hacked. The data was being held hostage. The people that hacked it, were wanting a bribe for releasing that. And typically when this happens, one or two responses is, well, normally you try to get it back yourself and get things under wraps. And if that doesn't work, you either have to pay the money and then try to fix it and hope it doesn't happen again later, or you just rebuild everything. Either way, a lot of dealerships are very reliant on this kind of software. And so for a lot of dealerships, it meant either going back to just pen and paper where they would manually write out orders and then they put them in the computer later. But a lot of salespeople and a lot of people that work there, they've been in the digital age forever. So they're like, how do we even do this? And at the same time, the other chunk of them were just like, hey, we'll just shut down our dealership. Not selling any cars when they're already some dealerships are doing well, some are not, but it's not an easy time. It's like, man, this is just really rough. So it's again, a little piece of news that I don't think is a reason for Tesla pumping necessarily, but they're not impacted by this at all. It's like they don't do dealership. They don't go through dealerships. They sell directly to people. I don't know that they picked up many people from that were like, hey, I'm going to buy a vehicle from a dealership. Oh, they don't have them. I can't buy them right now. Okay, Tesla, forget it. But I mean, there's such strength to their model. It just seems like everything that they're doing, from insurance to full self-driving software to the way that they're building vehicles, changing manufacturing lines, and even the way that they sell their vehicle and do services. It's so different than anything else. It's such a strong model. It's survived the test of time, and it proves things out even more if Rivian is able to follow somewhat of the same model. It's like, hey, it actually works if you have a good company that's well run, that has a good product. So I just thought that was interesting relating to Tesla. And then the other piece of news that's automotive as well. Ford had a big recall, and guess what Ford can't do with recalls?
Over-the-air updates.
Over-the-air updates, baby. Even if it's
let me get a. While you explain that, let me just get a drink. I'm falling asleep. It's late.
Yeah. So the news media, for whatever reason, and maybe part of it is Elon Musk himself, does not. They like sensational headlines. So anytime there's a Tesla recall, and recall means they have to send out a software update like 99% of the time, maybe a little bit less with Tesla. Click of a button and you're done. Every other vehicle out there, for the most part, there are exceptions. A recall means you have to go into a manufacturer and get things fixed. So just the strength and power of Tesla, man. And I can tell you, like being a Tesla owner now, there's still plenty of people that have no idea about vehicles, EV vehicles. They have no idea about Tesla. They have no idea how cost effective they are. They have no idea about the maintenance or anything. It just, I continue to pour money into Tesla, and also PayPal very, very heavily. Out of all my positions, those get like 90% of the funds that I have coming in. So,
Dude, so starting off at the dealership thing, I don't understand how technology hasn't completely eviscerated all middlemen in all industries. You know, all the way from your financial broker placing trades for you to real estate agents to dealers. Like, I don't understand how the advent of technology hasn't completely displaced all middlemen with just D2C, like just direct consumer experiences. It's such a like people are so reluctant to change their ways, and that stuff takes multiple decades to like multiple generations to essentially happen. But it's just you would imagine that a process that's quicker, more convenient, cheaper, more efficient, more effective would immediately be the default the moment that it's out. But it's still met with reluctance. It's still met with, I'm scared to put my credit card number on the internet type of thing. And I don't know. I just think that like we've had the internet now for what, like 25 years and, more than that. And it's just, you still have these industries, and like you have industries that are completely built on top of like middlemen companies, middlemen industries, and modern product offerings are coming out that are themselves middlemen, like the Open Doors and the Redfins and the whatever. And you're just like, how the heck is this still a viable thing? Like how isn't the easiest solution from a product perspective for all these companies, like the absolute no-brainer, let's go straight to the consumer. Like without even talking about any innovation in your product offering, without even talking about how we differentiate ourselves in the market, like let's just go direct to consumer, cut out all the associated costs, give those savings back to the end user, and then all of a sudden we have a competitive advantage because we're cheaper. Like how is that rocket science to a lot of industries?
Yeah, I don't understand. And yeah, even the insurance model, like insurance prices are ridiculous right now. And we're in one of those states. I think there's maybe a dozen states. Hopefully they continue to expand it. The Tesla insurance is offered. I know California and Texas are those for sure. And the way it works is, the vehicle is already monitoring you anyway. So it gives you a safety score. And depending on that score, which it's actually, from what I've heard from others, is fairly generous, it'll raise or lower your rates. Of course, if it raises them too much, you just go to somebody else, no problem. So, I mean, that seems like a pretty good model. And I, at least when I was pricing out our Tesla insurance, a lot of insurance agencies don't really know how they overprice and overvalue the Tesla. I don't know if it's like replacement vehicle cost is a worry or what exactly, but it was just annoying. So we stuck with our insurance for now, but especially if we go to 2 Teslas fairly soon, we'll just be on Tesla insurance and hope that our safety score is good enough. But it just, every single thing about it just feels like they've rethought the vehicle, where it had been the same basic idea for 100 years. Yes, there's been improvements. Yes, technology has come a long way. To the EV is like, this is just like, okay, let's start off from, do we even need 4 wheels? Well, yeah, they do. But just rethinking every single thing. And you can see that also in the Cybertruck. I don't love the Cybertruck the way it looks or anything. It doesn't seem like a real truck to me, but I know people that really like it. And that steer-by-wire, there was a guy that was in a somewhat similar industry, and he was talking about flying by wire, a little bit different process. But it's like, are you familiar with steering by wire? He's like, kind of. Like, is that happening? And so I shared some information with him on the Cybertruck, and he's like, that just blown away.
I mean, you're seeing these innovations now, and like, I mean, call me young, call me dumb, call me arrogant, but I'm of that school of thought where I just don't think government interference is ever good, like in any case. And you could argue, well, historically, DARPA was really good because it led to a lot of scientific innovations, but I mean, we're not in 1958 anymore, right? The government efficiency has completely declined. They have no urgency, no stakes to achieve anything, no competition. And yet, for insurance, for example, like I'm legally required to go with one of these two or three providers, and it's a completely like closed ecosystem. Meanwhile, all the real innovation, like Tesla insurance, embed software into the vehicle and lower my premiums. Like that in itself is a product that the market can decide because it provides efficiencies for the end consumer. Rocket launches, now all privatized. All of these innovations, the market essentially decides with their wallet. And yet you still have this like corrosive layer of industries that are laggards simply because the government props them up with all of this unnecessary regulation.
Absolutely.
Thanks, Tom.
You're not that young.
I'm going to be 30 next week. So thanks, Tom.
But you're Canadian, and so I think you adjust that down. So like 30 in Canada is like 26 in the United States, I think is a conversion because you use a different metric system.
COVID doesn't count, so I'm still like 27.
There you go. Welcome to the 30s. I'm in my 40s. Amazon's one that I wanted to talk about. You own Amazon, right?
I do not own
You don't? Okay. I don't either, except indirectly, through ETFs, through owning the index. So, in that way we both do. But Amazon is really, it's tied for second on my list of stocks that I follow very closely that I may start a position in. I know the price is up. That does not deter me from wanting to own Amazon. They've had a lot of good news, especially this week. Amazon, I think, has been undervalued anyway. They generate a lot of free cash flow. They forwarded during COVID, and while things were booming, a lot of their capital expenditures that they had planned to do, they just moved those and shifted those forward. And they have pricing power. And so a couple of things that happened this week. Well, first, they hit $2 trillion for a market cap, new all-time high today. So congratulations, Amazon shareholders. If you got Amazon, put in the comments there. I don't own it yet. I'm open to owning it. It's tied in my mind to Walmart. I know Walmart's a weird pick, but Amazon, benefits from AI tailwinds quite a bit. But this week, I think the news is about a few things. So one of the things is that Amazon had announced that they are coming out with a Chat GPT. Some have labeled it killer. I don't think that was Andy Jassy's exact words. It's Project Metis. Tevis, any thoughts on another LLM of Amazon pushing that out? Do you think that's a nothing burger or interesting?
There's two things I want to talk about. One is a potential trade in my dividend portfolio, which I'll tell you about that this reminded me of. And second, I saw this whole like $10 a month Alexa type thing.
Mm-hmm.
Sorry, let me turn this bitch off. Yeah, the $10 a month Alexa. And I think it's the stupidest fucking thing in the world, man. Like I ain't paying another. I'm like up to here with subscription payments. Like I am so like I'm being leeched with subscription payments. I do not want to pay $10 just so I can ask this dumb robot advisor what the weather is every morning and to set a reminder for me to water my fucking plant. Like I'm not doing it. I'm not doing it. I can just as easily Google Chat GPT. I can just as easily tap two buttons on my iPad or my phone for Uber Eats. Like there is no use case for me where I could say, oh, Alexa, order me more toilet paper. And it'll be like, cool, let me access your Amazon. I'm pretty sure you can do that on the free version. So I don't know, like it would have to be a really compelling offering for me to be able to, want to fork out $10 a month. But like, this is the thing, right? Like we are in the sort of internet bubble of the AI equivalent of an internet bubble where everybody's coming out with their own LLM and all their LLMs you have to pay some type of subscription for. And at the end of the day, I'm just going to wait 6 months for them all to be embedded in my iPhone and for that to be the absolute best one or to be the LLM aggregator essentially. And then slowly a lot of these companies will either die off or consolidate, or there will be a clear winner, because right now it's more of a perfect competition. But guess what? We just talked about EVs back in 2021. It wasn't a clear picture if Fisker was going to make it, or if Lordstown was going to make it, or if Workhorse was going to make it, or whatever. And now we have maybe three like main EV players, right? And that was a matter of 2 years. And so I think that with AIs, with LLMs, it's going to be somewhat similar. Yeah, sure. All the major, Amazon, Apple, Facebook, Google, they're all going to have their own. But whatever's the easiest for me to use and provides the most relevant data with regards to the context that it has on my personal information is the one that I'm going to use. And I don't think there's a really distinct competitive advantage for these to justify me paying when I can just move over to the next LLM and do it for free.
Yeah, I've seen some of that too. Do you pay for any LLMs? I guess first services.
I paid for GPT for like a full, I don't know, maybe like 6 months or so, and then I wasn't using it enough, man. So and the problem with it was like it had no context on my life, and it was just a closed ecosystem. And we've talked about this before, but I think if something said, okay, here's like your Apple device, and everything is saved and all the context is there, and you pay XYZ, I would still need convincing to see the use cases, but that would be the only case that I would be like more likely to pay. But depends on the use case, right? If it provides value to me, then I'll be willing to pay. But I don't really see the value of the voice assistant because I don't use it currently that much anyway.
Where I found value, and I do still subscribe to ChatGPT, although I've seen some switch. Apparently, Anthropic made a pretty good step forward with Claude, from what I understand. I've never used Claude before, but I see some people switching over there. Those are more folks that are using GPT previously for coding, which I don't code. So, but where I found a lot of value with ChatGPT is. And I could see the direction going this way, and maybe even marrying Amazon's able to pull something out like this, or possibly the Apple integration with ChatGPT is getting that personal assistant where you're like, I have this task and I want you to do this. Now it's limited, you're right, because it doesn't have the full context of you. Although some of the changes they've made with this newer 4.0 version, they do, depending on your settings and depending on how you set it up, it does remember prior conversations, even outside of the one that you're in. So it has context about you. And so it's getting this idea about you. You can ignore it. You can delete conversations. You can do whatever you want. So it does pretty decent with that, because I'll sometimes ask it to create a document or do something in this style that I've done before. And it knows what I'm talking about. Now, the voice assistant, they're not coming out with they're like promising to release it anytime now. And then Scarlett Johansson had to mess things up, because you called it out that the Sky voice was Scarlett Johansson, and then she had to get all mad about it. So thanks a lot, Tevis. It's still functional. It's still usable on the phone, but I really do like it when I'm in my vehicle. I've got a fairly long drive. I mean, it's not terrible, but it's 45 minutes each way on average. And in that time, there are times when I don't want to necessarily listen to something. I need to research or think about something. And so that voice assistant, I will turn it on. It's connected to my Tesla, and I'm just talking back and forth and finding information about whatever topic that I need to learn about. And it works very, very well. And I know GPT well enough, and typically I know the topic just a little bit, that I know where it's just starting to hallucinate and it goes off the deep end. Rarely does that happen. I kind of know how to phrase some things. But yeah, the goal for people, I think, and that's what people initially saw Siri as, although Siri was not able to do this. That's what they saw Alexa as, Cortana, if you remember Cortana back in the day. People want a personal AI assistant that they can just
like. I want, like, my vision of AI is literally Jarvis from Iron Man.
Yes.
But then I would not be using that thing to its full potential because I ain't Iron Man. Like, I'm just going to ask it, like, what the weather is and show me the, score from the Boston game and, like the stupidest shit, So um, I would be using a fraction of the capabilities. But I think Tom nailed it. The integrations in my mind is the secret sauce, essentially, of what can make this really powerful. Because if you can have like a Zapier type integration, or like an if this then that, you know, if my smart fridge is running low on Celsius, order me another case from Costco using my login credentials. Okay, cool. So then you like introduce automation in your day-to-day life. But again, it has to be so incredibly seamless that for the average consumer to use, it can't be complex, because if it's complex, then yes, people who are in that domain will use it, but then they will also be way more picky to choose between the other complex systems, right?
Yeah.
It's like those people who got like really hooked on smart homes at a certain point in time, and they're buying like the Philips Hue light bulbs and all of this, and then they're like, "Oh, Alexa, set the mood or whatever," and it like sets a different like. How many people are there out there that do that shit? Not enough to justify the price. So I don't know.
Yeah, we'll have to see. I think that if the personal um, assistant happens, it's more likely to happen through something that already has all your information and data. So
Yeah,
that's
you're right.
Microsoft, and that's actually Apple, surprisingly, even though I don't know how, I don't think that Apple Intelligence itself will be very good. It doesn't have to be. And I've actually rethought. We talked about this a couple weeks ago. And I was fairly bearish because I do think, I still do stand by this, that Apple does not know how to innovate anymore. But honestly, like if they have multiple different LLMs that they can attach to, that people can install, as they can give post priority for a price. And so like instead of like, oh well, who do I go for this extra LLM thing? If GPT wants to pay a little bit of money, they're the first ones on the list. Or if Anthropic wants to, kind of move up the ladder, they could pay a little bit too. It's creative, and they don't have to innovate at all. They just help people integrate well with what they're already doing, what they're wanting to do, to the point where, like, I don't use Apple at all, but having a personal AI assistant, like, hey, AI, I want you to go ahead and, I've gone on these dates with my wife. She's in the mood for this kind of thing. I'd like, this kind of budget on this day. What's a creative suggestion? It comes up with some suggestions. You're like, hey, that's great. Go ahead and book that for me, and then email me the details. Done.
Dude, it's not even that. Like there's a period. So okay, like we're going right back to the heart of my thesis around the iPhone being, that that catalyst, right? Because I've said this multiple times before. It is like the Trojan horse in every household. With regards to AI, it's going to get to that place where it has context so deeply embedded into your daily systems that it's not going to be like, hey, my anniversary is coming up. What should I get my wife? It's going to be like, Roy, your wife mentioned the restaurant that she wanted to try 3 months ago. I know your anniversary is coming up. I've already booked that for you without you asking me. Oh, and by the way, these are your wife's favorite flowers. I've already booked it from a local florist. And this is what she mentioned, last March that she really wanted. She wants, I don't know, whatever it may be, a Dyson Airwrap. I've bought that for you. It's in your Amazon cart. And you're like, I didn't have to lift a finger to do any of that stuff.
It's a wingman at that point.
But that's like legitimately a personal assistant. Like if
Yeah.
I had an executive assistant, that's the type of stuff that they would be doing.
Yeah. And by the way, I do use, this is the one Apple product. Very, very good. Everything else, not for me. Stop scratching. Okay. But no, I can see AI getting to that point, and that would be great to have, that level of detail too, where it knows you so well and knows your life so well with permissions. But at this point, you either have to go almost live off the land and be by yourself, or be connected. And
I think it would be really cool if you had like a sliding scale in your settings and preferences to determine how proactive versus reactive you want this thing to be. And then you could train the behavior by saying, okay, that was good, or no, that wasn't good. Don't do that again. because I would set this thing to be proactive on my behalf, and then it can just schedule meetings, for me. It can uh, do actions as though it were me, and then I can just validate those actions, and by that it can learn more and continue being proactive. That's the vision that I at least have for it. Right now, it's all reactive. It's all prompt based Gen AI stuff, and like that's cool. Like let that capture the imagination of the people. But I really think that the future of AI over the next several years is going to be all automation based.
Mhm. So we got off on this discussion just from Amazon. I just wanted to throw out two more things. We can pass by them, and I think you should, because a couple of people have asked about Unity. If you want to just talk about it for a couple of minutes, I think it would be useful because, I mean, we're in some stocks that are not doing well, and I think some of these are an incredible buy, and some of them are just absolute garbage, and I don't want to touch. So before we do that, Amazon, the other big pieces they're coming out with a platform that actually directly ships items from China, so it is cutting out the middleman. It's going to be a PDD, a Temu type competitor, still under Amazon's house. And then the other benefit that they have is they own a bunch of Rivians, so they will benefit from this actually as if Rivian continues to go up. They had a really killer earnings after Rivian IPO. Just a lot of it was because of the share price increase in Rivian once they IPO'd. So, but yeah, as far as stocks that are underperforming, I'll throw three right out here, and you can talk about Unity. Of course, SoFi, and we've talked to death about SoFi. For both of us, it's an incredible value, incredible deal. We don't know when things will turn around as far as a stock price, but the company is sound, and I continue to buy. PayPal, I buy hand over fist at this valuation at 58. It makes no sense at all in the world. I see what they're rolling out as far as innovation. I see what I expect out of 3 of the 7 First Look products, that they'll give about an 18% transaction margin dollar lift by 2025.
Mm-hmm.
2026, excuse me. And beyond that, they're buying back shares, 5 to 6 billion, at least 5 billion per year. At $58 a share, the yield is even more large. They're continuing to improve top and bottom line. So yeah, I'm buying that hand over fist. Versus Unity, at least for me, we started out and we talked about this back in December. Unity was my second favorite stock to potentially start a new position in. I looked at it as this is a duopoly, maybe a triopoly, and really neat technology that's been horribly mismanaged. And boy, am I glad that I didn't buy it. It's got not just because of the share price, because I'm willing to buy losers like PayPal and SoFi that are doing well, I think fundamentally, but are doing terrible as a stock price.
Yeah.
But I think Unity is a double loser. That the company is nowhere as good as it once was. It's been damaged, and the share price reflects that. Where are you?
Yeah. So I'll sort of walk you through some of my learnings and thought process changes, having been in the market now for like 7, almost 8 years. I realized that I could have made way more money if I just did an S&P, like a SPY, and just DCA'd into that. I wouldn't have had the content side. I wouldn't have had the, interesting conversations or like any of the fun aspects. I tend to have more of like a gambling mentality. So I'm like, fuck it, let's see for some of these names. So obviously, like individual stock picking is way more fun for me, even though I acknowledge that I likely over the long term will underperform. I have underperformed, I think, over the last 7 years. But here's how my learning curve has adopted over the last. Are you familiar with the whole Dunning-Kruger effect?
Yeah, and even that is its own Dunning-Kruger thing. But yes.
So just at a super high level, like I feel like I've gone through that to some degree, where in the beginning I was like, oh wow, this is easy, and then you go into this like pit of despair, essentially, and you're learning along the way. And so for me, I really subscribe to this idea of like a power law distribution in my portfolio to say, okay, if I have $10,000 and I pick 10 stocks and I put $1,000 in each, some of them are going to go to zero, and some of them are going to 3x, 4x, 5x, whatever. And so what you're going to have is two things. You're going to have, number one, a complete disproportion in the weightings of your portfolio over time. And number two, you're going to have a few winners making up for all of your losers. It didn't have to be that extreme. But I think for me, I sold winners and losers way too soon, like without even letting them breathe. And so then I overcorrected to the other side of just holding on forever, and saying, okay, well, if something goes to zero, then so be it. I would, because over the long tail, the winners are going to make up for it. And then it went into this phase of like, okay, well, I want to reinforce the winners and I want to not touch the losers, because over the long tail, who knows what can happen. I sold a company. This is back in 2017. Dude, the worst track record. Like I have the worst luck with these things. I sold a Chinese company. It's called Sogo. And I held this company for like 3 years, 3 years, 2018, 2019, something like that. And I sold it finally after I lost like $5,000 on it. I was like, I'm fucking tired of seeing this piece of shit every day. I'm so tired of it. I sold it in May, end of May, beginning of June. Guess what? End of July, they got bought out for like triple what they were trading at. And not only would I have made, broke even, I would have actually made quite a bit of money and made that hold a profitable hold for me because I was averaging down on the way. And so, anyways, long story short is I really want to, if a stock is falling, I want to add to the winners fundamentally that are still executing. And I want to not touch the losers fundamentally that are not executing. The difference between SoFi, PayPal, and Unity is very clear. Like PayPal could be whatever, like $60, $70, $50, $40, whatever, and they could still be fundamentally just chugging along. So as SoFi. And so I would buy SoFi all day long at $6. I would not buy Unity today because Unity is contracting in their business. They're falling in terms of revenue. They're guiding for contractions. They have a lot of expenses. They're like selling off lines of their business. They overexpanded in 2021. They were riddled with bad management, and they have generally an unclear direction of how do they turn the ship around. And so, do I want to buy Unity at $16? Oh, dude, I want to go balls deep in Unity at $16, but I'm not going to do that because the stock ticker represents the company, and the company is like has serious problems. And cheap can always get cheaper. I learned that one the hard way. And so the moment that Unity begins to turn it around and I begin to see a vision for like, oh, okay, there is a path forward for this company, then I'm going to start buying it again. And it might be $20, $30, $40, $50, whatever it is, I'm going to start buying it again. But even if Unity is $5 tomorrow and it's this condition, I'm not going to buy it because there's like the company is moving in the wrong direction. Now with SoFi, they're moving in the right direction. The stock is going down. Yeah, I'm going to be disproportionately buying it. And so naturally, the longer I'm in this game, the more my portfolio is going to look like, what it looks like right now, 30% Tesla, 20% SoFi. And that's half of my entire portfolio because I keep adding to the companies that are fundamentally executing, regardless of the stock price. And I don't to the companies that are falling.
One of the other differences too, for me is I feel pretty confident in around where the floor is, the potential floor, barring like a World War III or aliens invade or the New York Mets win the World Series type impossible situation. And I see that, like for PayPal, for SoFi, for Unity, I don't. Like they're a dumpster fire right now, and I don't know where that floor is. But so for SoFi, for me, and take it or leave it. But I mean, both SoFi and PayPal make money, so now they're not burning money. That's a factor. But is that tangible book value price. When they're about 1.2, 1.25 price to tangible book value, it's tough to push them below that. It really is. There's not really any risk. Even bears who are quoting tangible book value as supposedly the only value for SoFi, which I think they're dead wrong, they start getting interested at that price. And when bears get interested at a price, it's like, yeah, you're pretty near the floor. PayPal prints money. They're buying back their shares rapidly, and when they get to, like, I don't know, I was wrong about them going back into the 50s again. I'll admit that. Could they fall in the 40s somewhere? Absolutely. Somebody was telling me today that is like, hey, $40 a share. I could see it going to that. They clarify themselves and they're like, oh, I meant 40s. Well, $49.99 is a lot different than $40. $40 a share does not happen ever with PayPal. Not with what they're doing, not with everything they're rolling out. They're already priced for absolutely zero growth for the next several years. Yet they're growing like, well, not like a weed, but like a tree. So, and then you also have at the same time, a lot of innovation that's being pushed out that looks like it's going to be very margin accretive. So, but even outside of that, they're buying shares hand over fist. That kind of company, like it seems like that there's likely for. By the way, somebody here said, Dream said, buying PayPal at $30, and he did say, it's kind of a pipe dream. It's like that price makes. It's already a dumb price. Cheap can get cheaper, but for $30 a share, like not $39.99, but $30 a share for PayPal, either we're looking like 10 years down the road, and I was wrong about, like, there's competition, but I was wrong about how severe it was, and PayPal is generating like a third of the revenue of what it is now with lower margins, and things are just terrible, or there is some sort of like horrible macroeconomic thing where the U.S. is in the middle of a civil war or something like that. And yeah, $30 a share is reasonable then. Outside of that, it's like, it makes no sense. Unity, though, I don't know it. It's just guessing. This is the term that people use of catching a falling knife. I don't think some folks use it just for stock price action, but there are fundamentals and there are also technical levels in businesses you can look at. I don't know where the bottom is for Unity. I have a good idea of the lowest that it could conceivably be for SoFi and also for PayPal. That's why I buy those. Plus, they make money.
Dude, I mean, I've gone on the record in the past to say, look, the further SoFi falls, the heavier I'm going to buy. And if it goes back into the fives or the fours, like, my portfolio is likely going to be 2 stocks. And that's just how it's going to be, because the more the company keeps executing, the more of a no-brainer it becomes in my mind, right? And so it becomes more polarized, right? I don't think it should be trading at this level. Now, Unity, by that same measure, I totally see why it's trading at this level. And I really want more from management, whatever the permanent management ends up being. I want a direction. I want a vision. I want so many things that are completely dysfunctional right now. I mean, they're losing money, for God's sakes, right? So, yeah, very big fundamental differences there. Similar stock price action, and I'm adding to the one that I think is a potential for the long term. Now, do you want to hear about this interesting trade idea?
No. Oh yeah, I do actually.
So, in the dividend portfolio, Apple has done fairly well considering how much time I've held it. Microsoft recently all-time highs, and I asked my my 2 fairy godfathers, Steve and Matt. Jesus, it's late. I asked Steve and Matt on the dividend side. I said, "Look, should I sell Apple? Because it's my largest position. It's 10% of the dividend portfolio. It's like top 5, I think, in like the overall portfolios." I said, should I sell Apple at this point? Potentially even sell Microsoft and just buy QQQ, because the yield is fairly similar, but it also de-risks to a large degree, what that concentration could be. especially after the move upwards, like Apple moved 20 something percent up in a matter of weeks. So I'm like, okay, cool. Well, that's an interesting idea. The other thing I'm thinking of is like I want to save up more to eventually just buy some property. And instead of just doing that in a checking account, savings account, whatever, I was probably going to just buy SPY in the dividend portfolio, and then just start to load up on SPY more and more and more, and make that a cornerstone position as a cash pile, like as a little piggy bank. And if I want to allocate, money into dividend positions that I want to buy or whatever, I can just do it from SPY. It's an easy transfer in the account. And so I figured, okay, well, if I sell Apple and sell Microsoft and reallocate all of that with the gains and everything into QQQ, then I have QQQ as like a, 20% or so of the dividend portfolio. The yield is fairly similar. I mean, holding the two individual names pays a little bit higher. But I think what you lose in terms of the dividend yield when compared to the risk level is worth it. Curious to hear your thoughts.
Yeah, I mean, the nice thing is you're using gains that you've already made for
Yeah.
this, and I don't know. On one hand, you have to be a little bit careful with that, especially since you have a little bit of a gambler in you. To be like, I've got the hot hand right now, and this is house money, because it's real money. It's not the house money; it's your money, Tevis, your money. But if you understand that, and this isn't like some crazy YOLO like zero DTE options on GameStop that you're doing, yeah, I think it could work out. I do prefer this kind of trade, and I do call them trades when I'm giving myself multiple weeks or multiple months or sometimes even a year that I'm not necessarily wanting to hold long term, versus like trying to flip something, because I hope it goes up the next 3 days or that same day. And
So
yeah,
this comment here was Steve's advice. He just said, no, never sell Apple. QQQ also is Apple. Like, you guys
yeah,
know that, right? Like, I'm
yep.
not, it's just you're diluting your Apple with a whole bunch of other names. But like, I don't know.
So I don't think, correct me if I'm wrong, I think we've talked about this before. You do not own any index funds, any NASDAQ, SPY, no like 401k or pension or something that does that for you. Is that correct?
No, I just have individual names. In the dividend portfolio, I have JEPQ, which is something that Steve turned me on to.
Yeah.
But that's pretty much it. Everything else is an individual name.
Yeah, personally, since you're turning 30, I like that you're mostly invested in individual names, but having that framework of some in the broad index fund, I think is actually really wise. When you have very little in the market, like don't bother with that unless you just want to build that out, or you have no time. But you're not in that category. So
I mean, you know
for,
how much I have in stocks.
for me, I have. Oh, I'd have to look because I've outperformed the index a lot over the last few years. I think that I'm around 50-50 versus individual allocation on names that I like versus the broader index funds. What that allows me to do is take more risk in the form of concentration. So
Mhm.
I tell people, and I don't know what it is today, but I'm around like 70% allocated to Palantir in my individual allocation. That sounds crazy, right? And it is. But I don't even think about my index fund stuff. My index fund stuff there ensures that if some crazy thing happens and Palantir goes to zero and Robinhood goes to zero and SoFi goes to zero and PayPal goes, everything goes down to zero. As long as the U.S. has an economy, I can still retire. Will I own a private island? No. Will I be able to buy the state of Delaware? No. But that's okay. I can retire. So that safety net allows me to invest more aggressively the way that I like. So I can take risks on like, hey, I'm going to put 70% in one name. I can buy leaps with part of my position. I don't do this with all my position. Where I'm good if I lose $5,000 on this position for Leaps. No problem, no big deal. And I would not have that comfort level and that peace of mind if I didn't have this over here as a stability. So I really like it for you, even though, a good chunk of it is Apple anyway. But like you said, the NASDAQ is Apple as well. So having something like that where as long as the US is still here, that you'll be able to retire at some point in the future, I like. Especially if it gives you peace of mind. Now you're a pretty chill guy as far as it comes to stuff like that. Like, I don't think you're up at night worrying about what Unity's doing as a company or stock price. Like, even if Unity was like 20% of your portfolio or SoFi or whatever, it's like, yeah, that's fine. You're making money. You're investing. It'll work out.
Like, I'm at that place right now where every year I'm making more than the previous year, and like my active income can really cushion the blow of any individual stock going to zero. Like, it'll set me back a little bit, but it's not going to set me back enough where I'm like sad about it. So that's why, like, that's a thing that keeps me sleeping easy at night, where, okay, like, I'll put 10 grand into Unity and Unity can go to zero tomorrow. Like, okay, well, that kind of sucks, but whatever, I'll make it up in a couple of months.
Heinze had some pretty good financial advice for you there, Tevis.
Yeah, I mean, yeah, I don't know.
Marry into a wealthy family.
Yeah.
Do that. Then you're done.
Maybe I can also get a green card like that too, so that could be nice.
Yeah, it's a double win. So
2 birds with 1 stone. Yeah, so I don't know, man. Like, Tesla is my 3rd largest position in my dividend portfolio. Isn't that funny?
it is.
Because I couldn't help myself. I bought more at 160, and so it just went up. Eventually, I'm going to have to sell that off.
You are the Mel Cathy Woods. She, like ARC F, which is all financials or genomics or whatever. She's like, what's a really good genomics company? Tesla. What's a really good financial institution? Tesla. It's like, come on.
I mean, I don't know what to say, man. I like Tesla, but it's now close to 30% of my, like, everything combined, which is crazy. But if it goes to 500, we'll be on a boat.
And here we are. If you throw that up, it's still down about 21% year to date. Got as low as 142.05, which I did not buy right then. I bought around it. I've continued to buy. This has been the number one stock that I've been buying out throughout the course of this year. Dollar cost averaging. Look to finish this out probably next week. If not, it'll be 2 weeks from now. I'll have the Tesla position I've wanted to have. And part of it, by the way, is wheeling. So I'll have shares, but also have shares that I'm wheeling back and forth to. So just for fun. But yeah, we're at 196.37. It's been a little while since we've been flirting with 200. We had 194 back here. And like that was back in March 1st. Do we break past 200 soon, Tevis?
Oh, dude, like next week, maybe even this week. Like, what's 200, man? Like, 200 is, well, like another 2%. Like,
Well, it's a psychological level as far as resistance. But yeah, I don't. Tesla is a narrative-driven stock. Like, this is not. None of this is fundamental. Not zero. Like that's the thing is that some people have an issue with, and fundamentals are worth looking at, especially in companies that trade on fundamentals. But I mean, bottom line is this is all narrative. And the biggest thing going for Tesla, of course, is the Elon Musk vote. Elon Musk being back and fully invested as far as his time and attention, well, as fully as Elon gets. And of course, we have August 8th coming up, not too far. So great time to be a Tesla shareholder. And I really hope you're freaking wrong so I can get my last shares at a cheaper price than, $200. But, I'm buying. I don't care. I have a share goal that I'm looking to acquire. I'll add to it, here and there. But I wanted to get above a 5% allocation. I think with this move recently, I think I'm over. But got to get the shares first and have enough to, if I lose some in the wheel, that I'll still have, the shares that I want. So Mel Cathy Woods, I hope you're wrong.
Roy, let me just show you this, because I mean, how does that? Do you like that? How does that? That's 1.65. I think that's nice.
Yeah.
That's 1.65. And if Tesla goes into the 4 digits in the next 5 to whatever years, we're going to be partying on one of these.
Dude, if Cathy Woods if she is right about Cathy
Look at that.
Woods, yeah, we'll own a fleet of these. Like, there's no way she's right on that, but I mean, like, still halfway right, or 25% right.
This is on my mood board or vision board or whatever the fuck the white women call it. I'm manifesting this when Tesla goes to what, 1,500, 2,000, then this is all mine.
Well, one of the fun things too is Elon. I think with Omar, Omar said, "Hey, now that we've voted to give you this package and everything, then how does it sound to make Tesla the most valuable company in the world?" I don't remember his exact words, but it was something like "okay" or "sounds good," and it's just like, I would not bet against Elon here. I would not bet against Elon.
What is the stock price it needs to be the most valuable company in the world? Can we just do some quick?
Yeah, let's do that.
Some quick math. If Tesla goes to 2,000, I'll retire comfortably. Let me just plug it in. I have a little calculator here on my spreadsheet to show me what I have if it goes to 2,000. Yeah, I'll also retire comfortably.
So we need above a 3.36 trillion. And where is the market cap right now? It's 6.26 billion. And I'm using a Linux now, so
yeah. If Tesla goes to 2,000, boys, I'm gonna be retired. I'm gonna I don't know, maybe make a YouTube video a month just to say hi to you guys and
So we need it to do multiply that by the share price.
You absolutely know I'm doing this.
So it need to be 1,054 a share today. At this current market or the number of shares. So yeah, a little over 1,000. Can Tesla go over 1,000? Yes. Will it this year? No, it will not.
If it goes to 1,000, it's the most valuable company in the world.
Well, publicly traded company, yes. I think in the world, like, there's no private company that's more. So
that's interesting. That is definitely interesting. Is Elon a trillionaire by then? Like, he's got to be getting up there.
Yeah, I think he has to be. There's no way that he's not at that point.
That'll be a weird world to live in, man. Because we all look at our own whatever minuscule positions, us peasants, us peons down here, and we're like, "Whoa, 1,000! I'll have 50 grand," and he's like a literal trillionaire.
So the best thing about this, though, is like who Elon Musk is. Like, I'm a fanboy. Yeah, I don't think he's perfect in every way or anything like that. There's legitimate criticism you can have of him. But one thing I'll say is a lot of times when people are very wealthy, they don't allocate capital very well as far as building and creating new things and pushing the world forward. Elon doesn't have that problem. He is constrained, of course, by time, a little bit by money, not as much as he used to be at one point. But if he is the world's first trillionaire, you can bet that he's not going to just be, he'll spend the money on some stupid stuff, yes. But a lot of it's going to be allocated towards future things that he is building to make a world a better place.
He's fully going to buy another company just for, the memes.
He's going to buy Mars.
Like, it's going to, he's going to buy another company, and it's probably going to be like, I don't know, man, with $1 trillion, like, he'll do some stupid shit. He'll buy CNN.
No, please.
Down. What?
Buy PayPal. Buy it.
No, he's not going to buy PayPal.
I know he won't.
Yeah, exactly. He may buy the Diablo 4 expansion pack. He's going to buy the entire company just to pump up whatever his class is that he plays.
Divest it from Microsoft and acquire it. Yeah. Oh man, like he legit. So,
Blue Origin.
oh man. Did you see the Blue Origin?
Yeah. Sioux Origin. I saw it. That was
Like,
funny. Do you have it up?
no, I closed it a minute ago.
He'll buy Disney.
Probably
So,
not Disney.
yeah, definitely not SoFi. That'd be nice.
I don't have it. Yeah, Blue Origin basically is trying to use legislation to protect the environment, supposedly, to curtail some of SpaceX launches.
Which is crazy because, like, if Blue Origin was launching 10 times as frequently as they are, they would be harming the environment just as much, right? Like, and now they're like, we're not launching enough, so we're protecting the environment.
Yeah. Well, do you have anything else you'd like to cover, or is this a good stopping point for today?
I think this is a good stopping point.
All right.
I'm just reading up these comments. Yeah, I don't think I have anything else to talk. Oh, the Canadian government. I mean, do we even want to talk about? I don't know if I want to get triggered at 11:30 at night.
We could use just a short Tevis rant just to close it off. So go for it.
Yeah, basically they're stupid. But I might actually shouldn't have said that because I might get imprisoned now. Just given the policies up here. But the inflation rate went up, and the central bank blew their load way too early and started lowering rates. And so now they're going to be in a really interesting position because they're going to have to raise the rates again. They're definitely not going to keep lowering the rates. And yeah, bankruptcies are up to some stupid levels. The entire country is like, what was it? Monthly corporate bankruptcies in Canada are approaching levels not seen since the global financial crisis. The country is absolutely imploding, and politics is a mess. And all of our politicians in power are completely tone deaf, and they don't care. So, yeah, exactly, Roy. Thank you for bringing up the visuals. So this is the primary issues here. Meanwhile, the economy is literally crumbling. Yeah. So we'll see what happens. Oilers also lost, so that's like the cherry on top of everything. Yeah, zero things going right for Canada right now. Glad I left 4 years ago. God bless you.
Oh, and I sent you guys. I don't know if you saw this because none of you guys responded to this. Let me know if you've seen this.
Yeah.
This went viral.
Not
Not my original or anything, but yeah, I'm not in a good place right now. Are you in Canada? It's funny is like literally close to half of our tweets back and forth are like bashing Canada or bad news for Canada. I don't have any hate for Canada, but it's crazy what's happening up there. I feel for you guys, and I'm glad I'm in the United States and Texas. As crazy it is down here too. But
the algorithm is just too good. It like caters all this content to me now. I mean, one silver lining is they had a by-election here in one of the districts in Toronto, and it was like the stronghold of the Liberal Party. It was like one of their whatever the easiest state is. Like it's like, I don't know, LA for Democrats, or whatever the equivalent is for the Republicans. Like they'll never lose it in a million years. And guess what? For the first time in 31 years, they lost it. And yeah, the funny part is they had the Liberal Party was like celebrating before the results went live, and people recorded it, and it was just like embarrassing because the last, however many votes um, swung it the other direction. And so now you have this entire map of Toronto broken out into all the districts, and it's all red except for like right in the middle is like one blue. So that's going to be the case going forward. And yeah, man, we'll see.
Yeah, there's some not safe for work tweets you sent me too, where I won't post those because I don't want you to be demonetized or anything. But yeah, it's Canada has some problems and issues. Every country kind of goes through this too. If Canada was a stock, what stock would it be?
I would put my entire net worth into shorting that.
No. Like what ticker is Canada most similar to?
Oh God,
I would say Unity actually.
I would say Nikola.
Nikola.
Yeah.
Ooh, man.
Nikola Motors, where they have like their EV future, hydrogen
E-Taker.
powered, and they're pushing a fucking truck down a hill.
Faraday, no future. Yeah.
Their CEO buys a big mansion. Meanwhile, the entire company implodes. Yeah, I'd see the parallels between Nikola.
I would say Unity just because, I mean, Unity has one thing that has going for it is it's either a duopoly or a triopoly. And Canada has just immense national resources, natural resources, rather. And that's not going away. It's just they're not really. It's there, So whether they utilize it or not, whether they run things efficiently or not, there's a lot of issues. But there's hope for the future that at some point they'll be able to do something. Maybe.
Dude,
or go to zero. Who knows?
If Unity can replace Riccatello, there is hope yet.
Yeah.
But we'll have to wait. Like, I mean, so this is the thing that I hate about politics is that the feedback loop is way too long. Who determined that it was 4 years? Right? And how have we in the last, 200 years, 300 years not questioned that at all? Like, how is that such a given? How are people like, oh, well, it really sucks and life is unbearable, but let me wait 3 more years because that's when people like, what? Politicians in power can call a snap election anytime they want. How is it possible that everybody else has to wait 4 years, even though, like, what was it? There was a poll up here. Let me scroll up to our comments and pull it up. Look at this. This was the poll on, overall satisfaction up here. I would say those are pretty definitive results, and yet it's just like, no, everybody has to wait. Sorry. Like, how come the table stakes reality is never questioned? Like, how come it's never put into question? Like, hey, why is it 4 years? Is that still relevant? In our day and age, technology moves so much faster. A lot of the standard operating procedure in our life in general, regardless of politics, has been established in a very different time with very different standards. We're still doing, the public school system that hasn't changed for like 200 years in terms of the format. Is it catered towards how people learn best today now that they have tablets and iPhones and ChatGPT in their pocket? Probably not. But nobody questions these things, and that's the thing that frustrates me. Is that, especially for me, that I work in tech, is every day I get exposed to these technologies and literally on the bleeding edge of these technologies. We're working with AI now, and I have to read up on that and be knowledgeable. I have to have a vision on that stuff. Meanwhile, I come out of work and the rest of the world is like still in the operating procedures of 200 years ago. And nobody questions it.
Yeah. I mean, it's tough for people to change once they've gotten used to doing things a certain way. The other thing is, what we've seen in the last few hundred years, not even few hundred years, more like 200 years, is an aberration of the way that things have typically been. So like some of the earliest written laws Code of Hammurabi is one. I can never remember the Hittite code, but it's very similar. The Egyptians had something very similar as well. And the way, if you've ever read one of these, is it phrases it as for the elite man, and then it has all these different protections. So back then, the law was written to preserve those who had power, to preserve their power and protect them. The elite man, by the way, meant a land-owning male. Everybody else, very little protection and liberties, with a few geographic, regional, and sometimes religious exceptions. Now, I won't get into that. It's a longer discourse. But what we've seen in the past 250 years or so is an aberration to the norm where the rule of law actually exists. Due process is a thing. And then a lot of these protections are designed to actually preserve the rights of the minority and the disenfranchised. And there's a whole sociological and theological discussion of where that came from and why. We won't go into that. It bored everybody to tears, and we have like 2 viewers left. But no, this is kind of a reset of that, where we're seeing today in the United States, in Canada, other places in the world too, a reversion to that, where the laws are somewhat being written and controlled by those that have power for the benefit of those that have been in power. There's always been that. By the way, it didn't go away in the 1800s or 1900s. It was more subtle, and now it's more open, where everybody can see it and realizes it. And there's not a lot of people that don't think that. But it's worse in Canada, I would say.
Yeah, I don't know. It just blows my mind because it's very evident up here that, at least in the metropolitan areas, that life is completely unsustainable for the vast majority of people. I would say I'm fairly blessed given the industry that I'm in and just overall that I don't feel it as much as a lot of people here do. But regardless of that, the frustration is, incredibly high, and yet there is no tangible change. There is no, I don't know. It just seems as though people are just happy to, vent their frustrations online and then carry on their day just as they normally would. So it is what it is, I guess. We'll see. But it's just become, a meme in itself at this point, especially when you layer in the geopolitics of how other countries are seeing Canada, that perception of Canada as this nicer America with free healthcare is completely shattered, in my opinion, over the last, 8 years.
Yeah, fair enough. By the way, I think this is a good way to kind of close it out. There have been a number of studies that are done, and people have their biases in the ways that they vote and everything here in the United States, especially, of like, the markets do great under Republicans, or they do great under Democrats, or vice versa. Bottom line is, it's a lot better for an investor just to invest and not worry about who's in power. I looked at the returns since like 1950 something. I don't know where this chart was. It was a while ago, but you made so much less if you're like, hey, I'm just going to invest for Republicans or Democrats. Like, just find companies you love that are quality, that you believe in, and you want to hold for a long time. Buy them and hold them. And if the thesis changes, maybe look to reallocate. But and if, when in doubt, it's not wrong to do what Tevis is considering doing, buying an index fund. Will you have the best returns in the world? No, but you'll be able to retire. So that's a good thing.
Hold on, let me show you something. I'm trying to find it. Oh, yeah. Anyway, it doesn't matter. I'll show you after we stop recording, because I feel like I'm going to have to delete this video after I post it. But okay. Thank you all for watching this late night stream. This has been the Bootleg Weekly. Appreciate you all, and I will catch you all next week. Bye.